on cross-border transactions, there's a lot of pitfalls. There's zero rating, imports, and so on. And to tell us more about that, we've got Seccombe. She's the head of tax training at Mazars, and she's a presenter of many tax seminars. Thank you.
Good afternoon, everyone, and thanks for joining us here today at the Indaba. What I'd like to do is just raise some issues in respect of certain cross-border transactions, and again, just so that we know things to look out for, things to watch out for, because so often with tax, what we find is the devil sits in the detail. Now, firstly, I have to say a huge thanks to Reg, because he really did put a wonderful explanation for us on principal and agent, and I cannot stress the importance of understanding and having the contractual proof of those relationships, and you're going to see why in a moment. So let's start at the beginning. If we look essentially at what we want to look at in respect of our VAT, we want to look at two things for us. Number one is we want to look at the importation of goods and VAT that is payable on that. Now, firstly, we've got to always distinguish for VAT purposes between us importing goods and us importing services. So the first thing I want to deal with is the importation of goods. We've had a couple of changes in this scenario, and there's a little element of transfer pricing like thoughts that I want to remind us about in this regard. So once we've identified an import of goods, what do we want to do? Well, the first thing is, ladies and gents, is that anybody who's importing goods is going to potentially be liable to pay VAT on the import of those goods. So as you'll see on this slide, a very important point is that I'm not worried about who the person is importing these goods. I'm not worried about what they're going to do with the goods. What I'm worried about is the VAT that must be paid on the importation of those goods. So whether it's you and I importing goods in a private capacity, whether it's a business importing plant and machinery or stock, there is going to be a VAT payable in respect of the import of those goods. We've got a couple of little exceptions to that, which we find in Schedule 1 of the Act. And a silly example of that would be, what about if, for example, you were returning to South Africa with your own personal use assets that you took out of the country when you went on holiday? We also had some funny exemptions put in place when imported goods would not trigger VAT, and that went around the World Cup that was hosted in South Africa. So there's a few exceptions, but for the most part, when you import goods, you pay VAT. Doesn't matter who you are making the import and what you're going to use those goods for. So what we want to say is the following. We want to say, okay, if I have had to pay the importation VAT, when do I get to claim that VAT back, and what do I need to claim that VAT back? So firstly, we say to us, okay, the VAT has to be imposed when the goods are imported. And as Fadi pointed out to us, that is also sometimes imposed when services are imported. But I want to deal with that separately. So Section 7 comes along and it levies the VAT on the import. So at least we've got that part. So what we have to say to ourselves now is, fine, for anybody importing these goods, how much VAT do they have to pay on the import? Now, as most of you I'm sure are already aware, we start this calculation on what we call the added tax value. Now, the added tax value sounds quite simple at first, because it says to us the added tax value starts with us assigning or finding out what the customs value of this import is. So we think to ourselves, okay, but ladies and gents, it's not quite as simple as that, because remember, whatever I assign to this customs value of the importing of these goods, it's going to determine the VAT that must be paid on this import. So this customs value is a very big deal. It's one